Hey guys, it's that Dividend guy coming at you with another Motley Fool list. Today we're going to take a look at three top consumer staple stocks to buy now. Keep in mind, guys, consumer staples are stocks that you are going to have to purchase their products regardless of the market, regardless of what type of economy that we're in. Think of toothpaste, toothbrushes, deodorant, razors, soap, food, water, electricity, garbage. You're going to produce waste no matter what you do. These are consumer staple stocks, stocks that you have to purchase goods from regardless of what the economy does. And that's why they're such good investments. Jumping right in, we have the Boston Beer Company. The COVID 19 pandemic was problematic for most industries, but it was a boon for booze. With plenty of new anxieties to ease and alcohol and little else to do while sheltering at home, alcohol consumption in the US alone grew by double digit percentages in 2020. So keep in mind, guys, not only did the Boston Beer Company have a great year, so did all other brewers. Every company that produced alcohol in any capacity made money last year for the and will for the foreseeable future. The Boston Beer Company, ticker symbol SAM, captured more of its fair share of that growth, reporting sales growth of nearly 40% for the year ending in December. Last year's growth is just the beginning, though. Now regrouped from the initial disruption of the pandemic, analysts are collectively calling for nearly 50% sales growth this year and more than 20% top-line growth in 2022. The brewer's most recent earnings guidance calls for per share earnings between $22 and $26 this year, well up from last year's figure of $15. Analysts agree with that earnings growth outlook. The company's core beer brands like Sam Adams and Dogfish aren't driving the bulk of this growth, however. Boston Beer is knocking it out of the park with the relatively new alcoholic beverage category of hard seltzers. Malt beverages found in a variety of flavors. The company estimates its Truly brand of hard seltzers now accounts for 28% of the seltzer market, but the seltzer market itself only makes up about of a fraction of the national global booze business. The CEO suggested Boston Beer's hard seltzer sales could expand 70% to 100% in the foreseeable future, boosted by the recent launches of Truly Iced Tea Seltzer and Truly Extra. The Boston Beer Company shares won't come cheap. Priced at more than 40 times this year's projected profits, it's a name worth the premium, though, given its incredible growth pace. So, guys, if you're bullish on beer, there you have other options as well, but the Boston Beer Company is a phenomenally run company. Double-digit sales growth, and that seltzer is crazy good. I have a lot of people that have drank their Truly brand, and it's great for a seltzer. Next, we have Tyson Foods. This one's really a no-brainer. Tyson Foods, ticker symbol TSN, may never be the sort of growth machine that the Boston Beer Company is. What it lacks in raw firepower, however, it makes up for in consistency. Not every single quarter produces year-over-year net growth, but more do than do not. Ditto for net income. Indeed, with the world inching back towards normalcy, Tyson just reported its Q2 earnings of $1.30 per share and sales of $11.3 billion. That's up from a per share profit of $1.03 and revenue of $10.9 billion for the same quarter a year earlier. Year-to-date sales and profits are up comparably, and the company's top-line guidance of between $44 billion to $46 billion for the current fiscal year is up from last year's $43.2 billion. Except, isn't Tyson the same company that was forced to fire several managers at one of its preceding facilities for betting on how many employees would contract the virus? Also, isn't that the company dealing with the fallout of yet another chicken shortage, and at the same time contending with an inflationary pressures for that matter? Aren't consumers starting to steer clear of actual meat in favor of plant-based meat substitutes? The answer to all these questions is yes. The thing is, Tyson Foods has a long history of withstanding what typically end up being temporary problems. There's little the company is dealing with now that it hasn't faced and overcome before. So this is one of those that you have a lot of issues hindering the company, and you could get it at a pretty good price. I know Tyson Foods is gigantic. If you want to look at their product line, that would actually be a really good idea for the products of series that I want to do. But yeah, it's a gigantic company, and I do know that they've had some scandals and issues, but they are a phenomenally run company, regardless of what headlines say. Next, we have Reynolds, Ryan Reynolds, Reynolds Consumer Products. Finally, add Reynolds Consumer Products, ticker symbol REYN, to your list of consumer staple stocks to buy right now. If you're thinking that this is the company that makes Reynolds Wrap aluminum foil, you're right. It's not just an aluminum foil brand, though. Reynolds is also the name behind hefty trash bags, Presto food storage bags, and a handful of other consumables you'll often find in a kitchen. But wasn't Reynolds taken private a couple years ago? It was again, and then taken public again early last year. News that was largely buried by then growing coronavirus concerns that only became more overwhelming as the year wore on. That's too bad too, because the underlying story is a good one. Reynolds sells the sort of consumables that people buy over and over again, usually without a second thought. To this end, last quarter sales were up 4% year over year, with EBITDA improving by the same degree. That's a slowdown from last year's swell of business linked to more at-home cooking, but it's still respectable given the nature of the business. Analysts are looking for growth comparable to the first quarters to continue for the rest of this year and next, but that's not the chief reason an investor might want to own this this peculiar name. Reynolds Consumer Products boasts an above-average dividend yield of 3%, making steady cash payments it can easily afford to dish out. The upcoming payment of $23 per share is only about two-thirds of last quarter's operating income of $36 per share, and that quarter's bottom line was below average. Reynolds produced $1.97 worth per share of profits in 2020. The analysts are modeling earnings of $1.91 per share this year, to be followed by 2022 profits of $2.09 per share. So, guys, if I were to rank these three in order, I honestly first would put the Reynolds Consumer Products, because they have some brand names that I think would do very, very well. Next would be Tyson's, and third would be the Boston Beer Company, simply because it didn't say anything about a dividend. So I'm a dividend growth investor, and I do know that Tyson does pay a dividend as well, but I don't think it's as good as the other companies. So those are three consumer staples stocks to look into adding for your portfolio. Let me know if you guys own any currently. My favorite consumer staple is Procter & Gamble, simply because I use their products every single day. But let me know what your favorite consumer staple stock is down in the comments below. Also, remember, guys, the goal is 700 subscribers by the end of the year. So if you want to see 700 subscribers, make sure you become one. Hit that red subscribe button, hit the bell notification, and that way you won't miss any of my 2 videos that I post every single day. Thank you guys so much for watching, and I'll see you guys with the next list video. Take care.